Hello, everyone. My name is Andrea Armeni. I am the Executive Director of Transform Finance and convener of the Transform Finance Investor Network. I welcome you today for this presentation on the issue of going beyond certification and looking at fair trade as impact-driven business structures. Very exciting topic, very pertinent for what we've been looking at lately, and we're delighted that we have with us today Erin Jehan of the World Fair Trade Organization. It's executive, chief executive, I believe, and Johnny Joseph from Creative Handicraft. And with them, we'll look through the work that they have been doing and that the World Fair Trade Organization is pushing in terms of the structural elements of fair trade. And some of you might remember a webinar that we did a long time ago that had the title of Is Fair Trade Intrinsically Fair? And I love it that we have the director of the WFTO with us to revisit that question, because I think that the presentation that you'll hear today really puts an interesting spin on what we were looking at back in the day. And if you recall that discussion, it was really more on the issue of fair trade certification, which, as we'll see with Erin, is what most people think of when they think of fair trade. And what the discussion among the investor network members highlighted was the need to tie fair trade certification to sustainable livelihood or a living wage, right? Not looking at it as a thing in itself. They need to address issues of equity and fairness. That's where that intrinsically fair piece came up, right? Was fair trade just a little bit less unfair than traditional trade? And also the piece around wealth creation, wealth extraction, around where ultimately the price gets captured, right? The end market price for fair trade goods, where that value is being captured, and whether it flows to the communities that really fair trade is trying to support. So I'm delighted to see, having followed the work of Erin for years, even when it was at Oxfam Private Sector, this focus now on the link between fair trade and business structures. And I really think that was the missing link that came up very much in that conversation a couple of years ago. So that's the piece that we will focus on today, right? The structural element, the business structure that ties fair trade to the considerations that this network has been thinking about. And we can also put it in the context of the broader work that we've been doing around rethinking governance and ownership and the role that those play in creating the type of economy and financial economy that we want to see. You will see some threads that go back to our prior conversations with the working world, with purpose capital and the issue of steward ownership, the work that we did on alternative deal structures, which is really something that is coming more into focus for a lot of players in the industry now. I'll be heading tomorrow to the Alternative Capital Summit, where the core issue really is around some of these structural changes around both the deal structures and capital funds and alternatives to the closed-end fund. You've come across the zebra movement. And we'll be looking at it also for those of you that will be at SOCAP in a plenary session with Kat Taylor from Beneficial State Bank and Robin Verghese from the Open Society Foundation's Economic Advancement Program. So make sure that you check it out. It'll be an interesting main stage plenary, really trying to set the importance of this topic and some of the evolutions in governance and ownership and how they affect all the thinking around impact investing. In terms of the thinking around impact investing, you might have seen this special issue that the FT, the Financial Times, put out earlier this week. And one of the pieces was with Chris West and Bill McGlashan from TPG Rise, under the title of Can Impact Investing Both Solve Inequality and Bring High Returns? And as you will see from Erin in a moment, the two things are kind of disconnected, not because of anything metaphysical about returns, but because of who is it that these returns are going to and how does that piece fit within inequality. I want you to keep that question in mind, right? Can impact investing both solve inequality and bring high returns? Because the approach that Bill McGlashan took in the piece they wrote was that market rate financial returns essentially and positive social and environmental impact can coexist. But that doesn't get to the question, right? That gets to whether impact investing can, at the product or service end of things, improve lives in some ways, but there's nowhere anything there in terms of inequality. So to the extent that market rate financial returns are accruing to the holders of capital, well, that pretty much by definition would be not tackling the issue of inequality. So let's think of the structural piece in that way. And as you'll remember from the impact methodology that we have been presenting and that we've been developing internally with Aner Ben-Ami, the direct impact, that product and service impact that Bill and others are looking at in our mind is really only one of the categories in which you can have this structural and systemic impact. So we do need to continue to look at the structural impact of the enterprise in terms of their employment practices or the wealth creation for workers and suppliers, which is something that Erin will certainly get to, the community practices, on the investment side, whether the investment terms themselves are aligned with this concept of non-extraction, and the role that the investors can play in it in terms of actually improving, right, this delta, improving and managing the corporate practices, the sourcing practices, and the way that other investments themselves take place. So just something to keep in mind there, and with the really broader topic that if we're looking at a variety of issues within the ecosystem of impact enterprises and impact investing, we really need a variety of structural adjustments that recombine the governance and the ownership elements in a way that more correctly addresses those issues. And what has been very exciting in Erin's work has been this effort at a taxonomy of the business structures and how they stack up in terms of the governance and ownership bit, and how we can think about unbundling and rebundling the two, right? Going back to my days in law school, I remember that it was really just a matter of saying the enterprise is this bundle of rights, they get assigned in certain ways, so there is no reason why there should be only one underlying structure for them. So with that brief presentation, I would like to turn it over to Erin with many thanks for joining us today for this presentation and for all the terrific work that you and the World Fairtrade organization have been doing. So thanks, Erin.
Thank you, Andrea, and hello, friends. I'm noticing names in the list that I've come across before, so hello to those who have joined. My name is Erin Jehan. I now lead the World Fairtrade organization. It's 6 months into the job. I was at Oxfam for over 7 years, really quite obsessed with this question of if we want to tackle poverty, if we want to bring down inequality, then how do we redesign business and redesign it in a very structural sense? So it felt very serendipitous when essentially a community of enterprises who have set up an organization called the World Fair Trade Organization recruited me to lead them because it felt like that was exactly the kind of questions I want to throw into the world that these enterprises were putting up. So my background's in law and in business before I moved into the NGO and the non-profit space. But before that, I'm originally Turkish, and I come from a family of smallholder farmers from peasants, really. And a lot of the questions that I think the fair trade world deals with feel very relevant to my own personal history. So that's a little bit about me. But I should move into why I'm talking to you about this, and to sort of zoom right out and to zoom right out into sort of the broadest space. This is a statistic that we put out when I was at Oxfam. It's the most recent version of this statistic, which has been getting worse over the last 3 or 4 years, which is that only 8 billionaires own the same wealth as the poorest 3.5 billion people on the planet. And this real issue of increased wealth inequality and the way that our economy is increasingly rewarding returns to capital versus returns to labor felt like a fundamental issue that we needed to unpack. And it's something that through the lens for me and my work into looking at models of business and the way that models of business are prioritizing growing returns to capital, sometimes over all other considerations, that felt like a major focus. And you know, a huge issue around the world has been the fact that wages have not been keeping up with productivity growth. And this is obviously hand in glove with the issue of rising inequality that we've seen around the world. Really political unrest, we've seen economic unrest, we've seen all sorts of social issues because of this fact that we're seeing post-industrial landscapes where people are paid increasingly less, or there hasn't been an increase in wages for some years despite economic growth happening. That has been a major part, I think, of the problem as to why this issue of economic inequality has been rising up the agenda. But this is something that has also informed a lot of the recent analysis on, have we got the structures of business right? Really asking that question about, is shareholder capitalism, the way that we think about business as being intrinsically about maximizing returns to capital, maximizing returns to shareholders, and then finding ways of creating a case for other things that fulfill that goal? So having a business case for sustainability, the extent to which that is a model that is the right model has been something I think is increasingly on the agenda. It's now entering the mainstream politics, certainly in the US and the UK, but also in other places we've seen increasingly this question arise. You know, these are some stats that I got from Frank Bold, which is a public interest law firm in Europe that looks specifically at corporate governance reforms. They look at it from a very technical angle. But what essentially it shows is that we're seeing an increased obsession with mainstream business, with delivering returns to investors. We're seeing an increased obsession with giving more dividends or share buybacks as a way of sharing the spoils of economic prosperity. And that is one of the hypotheses, I think, that underpins both my presentation and my work over the last decade or so. That is one of the key elements that is driving inequality, is this increased obsession over time, that in 1970, £10 of every £100 worth of profit went to shareholders, whereas today it's £70. That's a statistic that came out of the chief economist of the Bank of England, by the way. It's not something that is created by NGOs. It was done when they crunched the numbers in the Bank of England, and very similar things were seen in the US, and we've seen similar statistics in India, in other BRICS countries as well, during my work at Oxfam. So it's definitely a huge issue that felt like forced us to ask the question of, do we need to redesign business, and does business have a fatal design flaw? And it sort of throws back to that question that Andrea alluded to in that article that included my former co-author, Chris West, with whom we authored something on impact investing a couple of years ago that we launched at the Skull Wheel Forum, about impact investing being too supply-driven rather than demand-driven. But the bigger question, I think, around whether you can have high returns and address inequality comes down to this key question of, if business shares economic spoils in proportion to ownership of capital, then have we just hardwired business to drive increased inequality? This is an issue because the World Inequality Report, written by mainstream economists around the world, has concluded that the main driver of inequality is unequal ownership of capital. So if that is the main problem, there's a fundamental distribution problem with how capital is owned, and then we're sharing economic spoils in proportion to that unequal ownership of capital, then we're perpetuating this and doing things on the side that are maybe remedying the situation to an extent. But there's potentially a fundamental first principles problem with business design if this is the key driver that is behind most corporate behavior. So all of this, I think, takes us I argue, to think about business structure. That if business is structured to have a board dominated by shareholders and the interests of shareholders, governing documents dominated by maximizing returns to shareholders, then we're in that same straitjacket that I just described. And we need to think about business structure because, as I argued, inequality is a rising problem, and it's something that we're seeing as a problem around the world, regardless of the way we cut up the figures. So the figures on the right in that graph is showing that whether we're looking at total global figures, we're talking about high-income G20 countries, we're talking about non-G20 countries, low-income G20 countries, that a decreasing share of the value of economic growth is going to people who are working. It's going increasingly to returns to capital versus returns to labor, and that's potentially a Marxist critique because it's Marxist language to compare capital and labor, but it is something that was at the bottom of Thomas Piketty's analysis of inequality, and something in the world's inequality report as well that we need to confront as an issue of the division of returns to capital versus labor. So all that sort of big top-level analysis on inequality aside, there's a second reason why structure is critical, and that's because of the planetary boundaries that we're facing. So a former colleague, Kate Rayworth, has come up with this fantastic analogy of a donut, which is saying that we have an ecological ceiling, we have a planetary boundary, the economy can't grow beyond a particular element if it's taking this kind of a natural footprint. So if that's the case, we need to also meet with that economic footprint a particular social needs. We need to have housing, we need to have energy, we need to have food, we need to have jobs and healthcare and water and all the things that society needs. So what her analysis is that we need to live within that donut. We need to not stretch the planet beyond its boundaries, and we need to not collapse our economies below a social foundation. And that area in between is the safe operating space for humanity. Now, at the moment, we're both exceeding the ecological or planetary ceiling and not meeting the social foundation. So the economy is unsustainably using up scarce natural resources and under-delivering on the benefits of that economic activity. So there's a distributional problem of the way economic behavior and economic activity, commercial activity, and use of natural resources as part of that is being distributed, and that's something that that means that we need to think about, well, how are businesses wired to have a more equal distribution? And that's something that I think underpins, from a very top-line perspective, why this question is being asked. So all of that aside, that's the end of my sort of big picture theoretical analysis as to why the question of business structure feels so critical at this point, from both an environmental perspective and from a social and inequality perspective. Where I see our role as the fair trade movement is firstly, our part of the fair trade movement, which is the business models part of it, is really about being a part of a broader alliance of alternative models of business that are showing an alternative to the power and priority going exclusively to investors. And that's quite an unusual thing nowadays, because most businesses that we see, most products that we see on supermarket shelves or on main streets and high streets around the world, they are made by brands and companies who are, and service providers who are designed to be shareholder wealth maximizing. But this is a fairly new phenomenon, but that is the mainstream model that's taken root. What I see us as the World Fair Trade Organization is being a part of this broader movement that includes B Corps, that includes the cooperative world and the social and solidarity economy and employee ownership and social enterprise and social business, and all these models that have said one way or another, we're not making every decision based on what maximizes returns to capital. We're making decisions based on a more balanced approach. So some of the examples you see there A handful are models from the WFTO, and we have 330 trading members who are businesses that are wide in this alternative way, one way or another. But a whole bunch of them I've included aren't WFTO members because I really want to paint this picture that we're part of a broader alternative. Everything from John Lewis, the employee-owned enterprise in the UK, which is a stubbornly successful commercial entity, even in the face of the financial crisis there, to Mondragon, one of the world's biggest cooperative networks, to Amul, the big Indian dairy business, which is a farmer-owned enterprise, and so on. So those are one way or another enterprises that have shaken off the straitjacket of saying all we do is prioritize returns to external investors. You might notice even models like Chobani in there, which I would regard as something that, even though it is in many ways looks like a normal sort of mainstream company, it has a significant employee ownership, which does mean that the stakeholders that it's prioritizing is a little bit more mixed than the mainstream model. So there are some internal stakeholders, the employees, that are part of the power structure and the priorities of the enterprise. So that's who we are. I haven't really yet explained how we relate to the critical lens that I know you guys have taken to the Fairtrade certification model. And just to place us in relation to that, the Fairtrade movement has got multiple systems in it. It's a diverse movement. In fact, just yesterday we launched a new Fairtrade charter around the world. We had more than 2 million people engage with this, and we had more than 40 events around the world, and over 400 organizations sort of support this charter. But essentially, it's a movement that is much bigger than any single system, any single certification model, or any other model. We are one of them. A lot of the pioneers of the Fairtrade movement, which started decades ago, are members of the World Fair Trade Organization. And what's ironic when we look at our members is that when they first started this adventure 30, 40, sometimes 50 years ago, members particularly in the US, like Serve or 10,000 Villages, they built businesses that were alternatives, and they in fact used the term alternative trade. That was their motto before the term fair trade was invented. And what they saw it as, we need to hardwire business differently. What evolved out of that is a certification system that was sort of spun off out of the movement that was about raw materials. So if Nestle came and knocked on the door of the World Fair Trade Organization, we wouldn't have had back then, we wouldn't have had a solution for it, because we would have looked at Nestle and said, you're a profit maximizing company. We're a community of mission-led enterprises. I'm sorry, we're not sure what we could do for you. You could buy from our members, but we can't really have a way of giving you a solution to some of your supply chain needs. Now, our certification system evolved, which said, Nestle, if you want to buy your cocoa, you can buy it on fair trade terms. You can buy it from fair trade farms, and you can then use a particular logo that goes on your products to tell your consumers that one of the raw materials, one of the agricultural products in this product that you're selling them comes from a fair trade source. So this certification model, which was based on how do we get this to scale and get big corporations and everybody to incorporate, spun off and became a huge success in what it tried to achieve, which was scale. Alongside this, our community of businesses remained, persisted, and still survive today. And now we've got more than 330 of them across more than 70 countries around the world. I put the top 10 list of countries there on the slide, and the size of the bubbles represent where they're more prominent. Our biggest membership is in Asia. It's a real hotbed for social business activity, for alternative business activity in South Asia, but it's a fairly big, broad mix from Latin America to Africa, and in Europe as well, where members have in one way or another demonstrated that they are an alternative form of business, that don't just buy one or two raw materials in an alternative way, but have structured their whole business DNA in an alternative way. So that's who we are. I hope that makes sense, and I'm happy to sort of clarify further if it doesn't. But what we do is, essentially, if someone knocks on our door and says, look, I think I'm a fair trade enterprise, I want to be in this community, I want to be able to communicate to the public, to the consumers, that I'm a fair trade enterprise with a mission at my heart, we say, well, okay, we're going to check. We're going to check who you are, and we're going to check what it is that's at your DNA. And we do this through a triangulation. So we start with looking at what is in your mission. So the first question of the standard is, what's in the mission of your business? Is it really to prioritize the interests of the people who are producing the products you're selling? Whether that's workers, farmers, or artisans, is that really at the heart of your mission? And there's a whole host of questions we ask around this to denote that. But then we then look at their trading practices and say, well, if your mission is to look after the interests of these people, then this should actually manifest itself in the way you do business with them. So how do you buy from them? How are you trading? Are you paying up front? Are you giving long-term commitments to them? Are you pre-financing? Some of the things that Johnny can talk about, because he's part of the community and he does business with a huge part of the community that buys from him as well. So there's a set of rules that they adhere to in their trading relationships. And then, so you've got the mission, you've got the trading practices, and then you look at the human rights conditions. So you go, okay, all of this should then lead to the workers, the farmers, the communities being treated in a more respectful way. We should be able to see that human rights and labor rights are upheld because it flows through. If the mission of the business is this and the trading relationships are shaped in a particular way, then we should also then see human rights being upheld, and we should see policies that are focused on this. So it's a triangulation. I don't think there's any other organization that takes this particular philosophy of looking at a business through its DNA, its trading relationships, and the human rights conditions. It's because at the heart of the World Fair Trade Organization, when it was formed, was to create an alternative model of trade, an alternative model of business, that this model evolved and became clarified over the years. So that's the philosophy that underpins it. And what we found also is that if you're taking this approach, you're taking very different kinds of decisions as well. You're starting to embed yourself in a community. You're not hedging your risks. You're not ready to leave when things get tough. So this was a surprise to me. So I came into the movement 6 months ago from a very sort of hard-headed focus on business structure, saying, well, we need to look at your board, we need to look at your constitution and your bylaws, we need to look at your profit distribution. How are you owned? What are the things that are really locking in your mission? That was really my focus. What I found is that those things were critical, but the bit that really locked in the businesses was the fact that they are embedded in their communities. So they've built a brand that means that they are tied in with the local community. They've made production and investment decisions that have meant that they can't leave at the drop of a hat. You know, a normal an average garment manufacturer in 3 or 4 months can get up, leave, and set up factory elsewhere. It always has that leverage over a community, over a government, in the way that human rights are upheld. So it's always got, in a sense, a knife against the throat of the local community, the local workers, and the government. And it's deliberate in the way it focuses itself to try to not be too embedded, because it's hedging its risk. It's giving itself negotiating leverage. When I meet our entrepreneurs and our businesses in the WFTO community, they've made the opposite decision deliberately. That they've made their production decisions so that they don't have loopholes, they don't have easy ways of exiting trading relationships, they don't have ways of giving themselves flexibility, and they've done this in different ways. And it's a bit of a byproduct of who they are and the fact that their mission is to support the people who are working for them, who are the artisans producing for them, who are the farmers growing things for them. So the long-term contracts, and also obviously the mission and the structure locks them into a community. So if their board is dominated by local organizations, dominated by local worker groups, dominated by producer groups, dominated by other mission-led foundations, the board's not going to be looking at ways they can cut costs here and there because there was a currency fluctuation. They're not saying, well, suddenly there's a cheaper location somewhere, let's find ways of wriggling out of production here and moving to that place. Because they don't want to trigger a race to the bottom on wages and costs, and they're committed to their local community. So these are the sorts of things that are hard to measure, but you start seeing manifested when the mission of an enterprise really is to look after or to work in the interest of a local community. So all of this kind of gets checked through a guarantee system, and this is probably, a very difficult job for. There's a small team I have that really focuses on this, and there's a network of auditors they work with. But it's trying to then make sure that the people entering the community of the WFTO are truly the ones that you're hearing me describe. So what they do is there's a self-assessment report at the beginning that they all have to fill out. Based on this, we get a bit of a sense about, is this really a mission-led business? You can tell from the way they're answering things. Are they just throwing up mission statements here and there in order to skip through some steps, or is it something that's really embedded in their structure? So at that point, we try not to waste people's time. If they're a profit-maximizing business that just wants the branding advantage of being a fair trade enterprise, they get a strong signal that we're not the right community for them. If they do pass, they have a peer visit. So a peer review takes place, and this is a really interesting part of our model, because it's a bit of a community. People like Johnny, who you're going to hear from, might go and visit them if they're in the same country and get a sense of, is this a business that really belongs with us? Does it share our values? Does it share our mission? Has it internalized this focus into their business model? And if after the peer visit, then there's a monitoring audit. So an external third-party auditor comes and checks through everything based on the 10 principles of fair trade. And the last thing is the Fair Trade Accountability Watch. So anybody who sees anything that looks like is not quite kosher can raise concerns that get investigated. So this is sort of the mechanism for making sure that the people in the organization and the membership is genuinely committed to fair trade and producer interests. But just to sort of place us again with where we sit alongside other models, other concepts, other philosophies. On the left is probably all the stuff you've heard of, the raw material certifiers. So, everything from Rainforest Alliance and UTZ to Fairtrade International, which you can see the logo of there, to Naturland Fair, etc. So these are the ones that if Nestle knocked on the door, they would say, let's check where your cocoa comes from. That's the extent of the certification we provide. Let's just make sure at least on that front there are some conditions upheld, and some do a better job than others on that front. On the right, there's I think an increasing amount of organizations that are looking at verifying whether something really is a mission-led model, or an enterprise has something at its core that is different to a mainstream business, and whether that's a B corporation or benefit corporation model, or it's social enterprise model or unisocial business. This is about asking, is there something different, a mission at the heart of the business? And again, different levels of rigidity on that as well. I think what we do is we're sort of in between the two, because the core exam question we ask is your DNA different? Is your DNA about a mission? But we do it with reference to the supply chain. So the people who are making the products, who typically are the most disempowered and marginalized people in the global economy, the people at the bottom of those supply chains who are knitting fabrics, who are growing cocoa, who are making jewelry. They're the people who would otherwise have the least voice and the least representation. And these are the stakeholders that we prioritize in asking the question about the DNA of the business model. So there's a little bit of the overlap of those two questions of what's the core of your DNA as a business model, and how are you operating within your supply chain. What we found, and this wasn't a deliberate sort of focus necessarily when the World Fair Trade Organization was put together, but what we ended up finding is when we looked at who are the producers, who are the farmers, the artisans, the workers who are growing and making the products that are sold in these businesses, by these businesses, we found 74% were women. Now that's a whole lot of sort of hypothetical questions could be asked about why that is, that when you set up a mission-led business that is truly about empowering people in developing countries especially, that they gravitate towards focusing on empowering women. It's probably not an accident, because it's typically in developing countries, women are often in the most marginalized positions. And again, you'll hear from Johnny, his women workers are his boss. There's a photo we use a lot to demonstrate, to explain that model. But those often women would otherwise not have the same opportunities, and those mission-led businesses tend to gravitate towards supporting them. So we found 74% of the producers were women, and that really sort of blew us away recently when we did the analysis. But we also found that more than half the CEOs were women, and more than half the boards were women. And that's phenomenal compared to mainstream business, particularly in mostly patriarchal societies where these businesses are based, that they are skewing towards having more women in leadership, having more women in jobs, more women in as producers supplying them. So a couple of real-world examples, and a couple more minutes before I sort of pass over to Johnny, and also giving the taxonomy that we found when analysing our 330 enterprises. Cordage Works is an interesting one. It's one of the founding members of the Fairtrade movement, has been around for decades, and it's based out of Bangladesh. It's more than 1.4 million in turnover, so it's not an insignificant business. By the way, the turnover of our businesses in our community range from under 100,000 to over 100 million. It's really a broad mix. The biggest cluster is around a couple of million range, which is around where Cordage Works is. So around 1 or 2 million, plus or minus a little. But this is a sort of a typical size, I would say, when looking at our membership. They're exporting to Europe and across Asia as well. They have 5,000 producers. Again, majority of women who are producing them. They're grouped in small groups, and the board is deliberately shaped to be dominated by representatives of those women. The rest of the board are essentially mission-led organizations, and as with some of our older members, there's often some kind of charity or NGO that helped establish it decades ago, that provided some kind of support to get the business going, and they might retain some shares that they use in order to make sure that business stays on path and retains its mission. So another example, which you might have heard of if you're based in the US, is Dr. Bronners. Dr. Bronners, like multiple members, has multiple identities. So some of our members are B Corps, 5 or 6 of them are B Corps, as well as being fair trade enterprises. Some of them are will consider themselves social enterprises in a more conventional sense, as well as fair trade enterprises. Some of them will be organic, some of them will be circular economy. So often they will cut across multiple movements and multiple identities when they define themselves externally. Some will be cooperatives and employee-owned models, and they'll be proud of that structural characteristic, and they'll make that prominent alongside being fair trade as well. But Dr. Bronners is a significantly large member, is I think our largest member actually. They export everywhere. I mean, I was looking at the countries that they're selling their products to and their soap products to, and it's literally everywhere. I mean, their model is essentially to really focus their profits into reinvesting into the business and into the activities that support the workers, the farmers, the producers in their supply chains. They're a benefit corporation, so that there are certain legal characteristics that are upheld as a result of that, and the mission is in their governing documents, it's in their constitution and their bylaws, but it's essentially about the more interesting bits I found was the way that the profits were being reinvested into the mission that they have embedded into their business. They also have a specific pay ratio, which is an interesting part of the sort of inequality picture, because that's, if anyone's looked at pay ratios from top to bottom earners, 5-to-1 is one of the most sort of egalitarian models that you'll see. And then the last example I'll provide is from Germany. So Puente is about sort of 10 million in turnover, one of our upper middle sort of size members. The most interesting thing of them is they're probably the most quintessential multi-stakeholder model of business that I've come across. They've looked at their stakeholders when the business was being set up and said, right, we have 4 key stakeholders. How do we deal with the trade-offs? How do we deal with the tensions between their interests? There are the founding entrepreneurs who founded the business. But then there are the customers, and those customers are shops who are based around Europe, who are selling Fairtrade products. These are often themselves mission-led Fairtrade shops or world shops who are based around Europe. So they've got shares and they've got a board voice. But then obviously their own workers have got an interest in the business, and they have shares and they have representatives on the board as well. And then there are the producers in their supply chains. So similar for them. I mean, it's fascinating because it means that a lot of the tensions that would play out externally to the business get played out internally in their boardroom. So they would be, if there's a tension with, for instance, pricing, if the shops might say, right, well, let's reduce pricing because we're going to get more sales, and this is going to be good for the fair trade movement, and it's going to be good for the shops to be able to survive commercially. The producers are going to push back and say, well, that means that there's less money for us. We can't reinvest into improving design, into improving productivity, into rewarding our workers and our producers, and that sort of tension is going to be played out within their boardroom, and that's worked out for them. I mean, that's a business that is doing well, that's surviving in a commercially tough situation, but certainly something that I think has certainly inspired other models around as well, particularly in Europe. So this is my final slide before I pass over to Johnny. But what happened when I came into the role 6 months ago is I came in after sort of a real, as I said, almost an obsession with trying to understand business structures. Well, what is at the heart of businesses that forces it to prioritize this goal over that goal, how the trade-offs manifest themselves. And we looked at all the data we had as a result. So I gathered a small team of 3 people and said, let's look at every single one of our members, and let's try to understand what is it that's distinct about them that differentiates them from a mainstream model. Let's paint a mainstream model out there, which is the board is 100% dominated by shareholders. The interests are 100% about maximizing returns. And the priority set across the business is to maximize returns. How do each of our members buck that trend? How can we articulate that? And when we finished the analysis, it fell into 4 different quarters. So the first is the board. There was a huge range of board compositions, but we found a whole host of members that had boards that had in one way or another incorporated either the worker or farmer into the board and having a representation for them, or had mission-led organizations on their board. So that might be an NGO, that might be a community organization, that might be a foundation that has a particular mission at its heart. But one way or another, there were voices on that board that were forcing the priorities to be set in accordance with the interests of the workers and the producers. Profits. This was an interesting one because it's a very open-ended question that gets asked. So some will go into much more detail than others, and we're in our next iteration we'll be collecting much sharper data about the profit models. But there's essentially it fell into 3 elements across the board, and nearly exclusively the whole membership had at least one of these, nearly all of them. There was either a limit on profit extraction in one way or another, which meant that it had to be reinvested in one way or another into the business, or there was a requirement of a distribution to workers or to farmers, or the profits were going to social programs or being donated to other organizations or foundations that would do social programs. Sometimes it was a mixture of all 3, which was probably the most common one that we actually found. And sometimes businesses were saying we deliberately don't make a profit. Like if we look like we're going to be in the black at the end of the year, we will change out some of our decisions to invest into the business earlier on through the year, or to distribute, or to change our practices so we don't end up with a profit. So that was sort of the range of things we saw in the profit column. Governance. And I'm using this in a very sloppy way, deliberately, the term governance, because the board and the profits and the owner, everything could be covered under that umbrella heading. But I mean something specific here, which is that either they had a specific legal form, for instance, a social enterprise legal form where it exists, or were a benefit corporation, as I mentioned, with some of our members, or had something else in their legal form that forced it to prioritize decisions and interests differently, or it was in their constitutional bylaws. So their constitution has a clause in there like the primary goal of this business is to benefit the workers and the farmers. So we often saw that sort of model across the membership. The fourth area, and these aren't mutually exclusive because obviously ownership can determine the board and the governance and the profits and can flow back and forward. So, but the fourth area that we found something interesting going on is that it was either owned by a mission-led organization, and we saw lots of those. A lot of the original sort of founding shareholders, which were charities or businesses, or charities or church groups or local community groups who set up these businesses, still retain those shares. Or there was some form of collective ownership, like a cooperative model or something else. So this is what we saw. Just to remind you guys, I mean, all of these four kind of groups, they're all part of this question that we're asking about mission and structure. We do, on top of this structural question, ask, analyze the trading practices and the human rights conditions as well. But this is the bit that I was most interested in zooming into, because we can explain the trading practices fairly well. We can zoom. There are very specific requirements on pre-finance. There are very specific requirements on buying fair trade products or buying fair trade raw materials wherever it's possible to buy fair trade. So if it can be fair trade, your inputs must be fair trade. All that stuff is really easy to assess for us because that's very unique to the fair trade movement. Same with the human rights work on whether it's labor rights or it's child rights or migrant rights. All that stuff is fairly well documented. The interesting bit that I think is least well documented is the mission and structure bit, and that's the bit that we're unpacking more and more. And the final thing I'll say is that there are I think mission and structure are not a panacea. We're seeing a lot of businesses that have an interesting mission and structure that aren't in our community. One example that popped up that I've been involved in and engaged with a wonderful business, a B Corp called Ben & Jerry's, which I'm sure you know, which is owned by Unilever. If you look at the board of Ben & Jerry's, you'll see all sorts of fascinating, interesting interests represented, like Greenpeace, for instance, who has a seat on the board. But Ben & Jerry's procurement is controlled by Unilever. So we need to ask the questions that go beyond the specific mission into understanding the broader power dynamics within there and the broader practices and the conditions that are being set to be able to, I think, get a full picture of all of this. So I hope that makes sense, I hope people are surprised that the fair trade movement has got this element of social business, social enterprise, alternative business model aspect as a core part of its DNA within this particular part of the fair trade movement. One of my favorite models that I would normally have talked about at length, we've got the CEO of ready to speak. So I'll pass over to Johnny, and Johnny, I'll give you the floor.
All right, thank you very much. Erinch, can you all hear me?
Yes, loud and clear, Johnny.
All right, thank you, Erinch. I think you have given a great overview of what fair trade has been, and then I think you have also explained how we are involved in this movement. I come from Mumbai, and it is 11:20 here, it's pretty late, and I joined this because I am pretty interested in the whole movement of fair trade and in how it has been bringing out changes in the lives of a lot of people here. The story of Creative Handicrafts is of a woman who was moved back in 1984, seeing the misery in the slums, seeing the misery of women in the slums. And she saw those misery, and then she said, if at all I have to move these women out of this misery, the only possibility is to free them economically. And to free them economically, she needed to train them because most of them were unskilled or disadvantaged, or I would say both unskilled, and disadvantaged. So she got these women, and then she started training them into producing textile-based handicrafts, textile-based other home linen, and also garments, apparel for mostly for women. Today, it has moved from a little charity philanthropic organization to a social enterprise which employs more than 270 women on a full-time basis. I would say many a time we say 270 may not be a big impact that we are making, but it reaches out to much beyond that, because these 270 women are full-time, and then there are another 800 women who are working on a seasonal basis. Textile industry is mostly working on seasonal basis, because we work for Europe and United States, and most of the time the production is for summer, spring, summer there. The governance of this organization is controlled by what we call a general body. The general body consists of all the women who work with us. I would like to reiterate here that the women who joined Creative Handicrafts, when they joined, there were women who had no skill, no education, and in absolute misery. The only possibility for them was, or the only opportunity was, to train themselves, put them back into work so that they can stand on their legs. And as I said earlier, we have a governance structure which is something like a society. We call it a society here, or an association of all the members. I will move to the next slide. The next slide. Yes, as the legal form is an association of producers. The board of this organization is elected by all the members and its associates. And one of the features that we highlight over and over again is the profit that we annually distribute with the women. Now, it is not too long since we started making some profit, because we were a charity. We were trying to improve our selling. We were trying to improve the productivity of the women, and it took pretty long time for us to establish ourselves and reach a level of break-even and profit. So we started making a considerable amount of profit in 2005, and since then we have been sharing 50% of the profit with the women, and the other 50% we plow back into the organization, into organizational development, into improving capacity, etc. The ownership is definitely producers, and I highlight here, it doesn't mean that they can appropriate the accumulated wealth of the assets of the organization. You have ownership as far as decision making is concerned, as far as benefits are shared, but because it is an organization that's built by the donations, by private and public donations, and a lot of people involved in India and in abroad, it is not a shareholding pattern where the women or the producers are in a position to share or appropriate the wealth and the asset that has been created over a period of years. It was started in 1984, as I said earlier. We'll move to the next slide. Yes, if you compare with mainstream businesses, what I differentiate with mainstream businesses is mostly what we call the first principle in fair trade, that you take a disadvantaged group of producers and you try to empower them and make them skilled, and make sure that they are able to stand on their legs. So the unskilled and disadvantaged being employed. In a normal business, you will never employ that. This is not your priority. You take only skilled people. You evaluate the skills of the people, and based on their skills, you acquire people. But here, no. If they are skilled, we normally do not take them, because the market is open for them. They can find a job in the open market. And so we take only the unskilled ones. This is with regard to the producers. but we have a group that is called, the hired staff, the support staff, who are hired on their skill level. For example, we hire a designer who is pretty well trained in designing. Then the training provided. We provide a training of 6 months to these newly hired producers, and in these 6 months they are given a stipend so that they can continue the training. So during this period, they do not produce and they bring no benefit to the organization, but this is the core mission of Creative Handicraft, that you hire them and you train them and you upgrade their skills. The profit is, again, as I said earlier, is distributed with the producers, and definitely the aim of the organization is not maximizing profit. I always say we do not intend to maximize profit at the behest of the weakest in society. Now, if a woman is not so productive, we try to accommodate her, make her part of our organization rather than eject that person out because of productivity. Many of the normal mainstream organizations would always try to replace machines with, replace machines for men or women, because if the productivity can be increased by machine, and if a one-time investment into the machine can help in reducing the recurring expenses, the normal conventional business would do that. But I would say a business like us would never do that, because maximizing profit is not the motive, but employing or providing livelihood to these weakest of the section is the profit that we are looking at. Next slide. This may be the last slide. Now, if we are to reach more women in Indian society. There are hundreds of women who are living below poverty level in India, and which means less than $1 per day. And if we are to reach more and more such women, it calls for definitely investments, calls for investments into training women, calls for investment into production, creating a production unit that has a better capacity, calls for investing into entering into the domestic market, which is a priority for us, because we feel that the whole world is in India to sell, and we don't take this opportunity, or we don't reap this huge opportunity to enter Indian market. So we would look for definitely investments in the growth of the organization. That growth would mean that we would like to reach out maybe to thousands of women more in rural areas, in other slums in Mumbai, but that would be possible mostly by increasing the market, and increasing the market share would mean a lot more investment. We would also look at investors who would be interested in creating an impact. I would always say that the impact that we create in the lives of women is the changes that we bring in the lives of each of these women. And if the investment has to be guided by this motive, not guided by the return that we can get on the investment. Definitely, we would also say that today no investor is looking at investing into an organization in the form of only a grant. So far, we have been receiving only grants and aid, and the business or the social enterprise has been built by grants and aid from various international organizations. But today we are also looking at investment who would look at a reasonable exit at the end of a certain period of time, where the value of investment would have grown. We would look at long-term investment, organizations, individuals that would assist in impacting more lives through a long-term investment. This is what we are looking at. I would say this is in brief what we are doing. And we are also, I think I forgot to tell you that we have been selling to many international fair traders. As Erin said earlier, we are selling to organizations like PeopleTree UK. We are also selling to mainstream buyers like Monoprix. And one of the features of these buyers that I would like to share is that they share in our mission. They share in building the capacities of these women. They share in the impact that we would like to reach in the lives of the women. They probably by advancing when it comes to purchase order, they pre-finance orders. They normally try to be part of the organization or try to remain a long-term partner in our mission. So, and this is the kind of difference that we see in the buyers, fair trade buyers, compared to a conventional buyer. I'm not sure I have covered all the points, but I think Erin covered a wide range of issues in fair trade, and I would focus on our organization. Thank you very much.
Thanks, Johnny. So, Andrea, over to you.
Well, thank you, Erin, and thank you, Johnny, for the presentation, as well as for being willing to join us at such a late hour in India. Really appreciate it, and it was a terrific and comprehensive presentation. And thank you for all the great work that you and the people at Creative Handicrafts are doing. So I'm going to put out there just a couple of comments that came up for me as I was listening to you, and then we can turn, Erin, I'll let you take a look at the questions that are coming in the chat, or I'll pass them along to you if they come directly to me. So one was on the slide that you showed, Erin, with respect to the bubble that went all the way from Chobani to the German opportunities, to Solidale Italiano, etc. Is that I was really struck by the breadth of possible different structures that there are. They're sort of on a continuum, right? There is kind of a bulge on one end of what we're familiar with, shareholder maximizing enterprises. But when we think about the alternative, or this new economy, as it were, it's important to see that there's really quite a spread of different approaches that are possible, and oftentimes we think, it's either Halliburton or a worker-owned co-op, and with a big gap in the middle. And rethinking of it in terms of the continuum I found very helpful. The other, which perhaps ties to the interest of many of the folks on this call, is really the implication of this work for the investors, right? And ultimately, what happens on the ground and with the company eventually flows either up or back down to the investor decisions, and the type of constraints that are put in by the enterprise likely flow into constraints on the investors themselves. And this could be on a fund, which means it could be, again, going further up, constraints on the LPs or on the carried interest for the fund manager. Right, there's a whole chain. I have not seen yet very much the link being made to what does this mean for investors, and how are investors approaching this, right? Is it just something that the investors can do if they are values aligned in most cases, right? Does it require a reconception of the role of the asset owner, essentially? Or is there, again, a continuum of opportunities where somebody could do it in different ways? And to close that thought, a little dramatically perhaps, I want to go back to something that we had brought up when we talked about the Luca Fantacci book on saving capitalism and the problem of liquidity, right? And I think that even very progressive investors think of liquidity as, like gravity, one of those things that exists and is absolutely important. Well, maybe gravity is not the right example, but like it's a given that liquidity is a good thing. And what you were saying about remaining rooted in place and staying there through the thick and thin at the company level, seems to me to be tied to an anti-liquidity approach at the investor level. And frankly, even most impact investors that I talk to still fetishize liquidity and think that that's the most important thing. But it means a lower level of skin in the game, right? More of a chance to get out when the going gets tough. And I will close up by saying that a couple of the examples that we have seen have actually come either from the fair trade movement or from fair banking, right? With preferred non-voting shares type of structural examples, or with otherwise tying yourself in a way that commits you to staying, even if things go partially south. And I'm hoping that some of the investors on the call might want to push back on that, because we've also trying to see how it's possible to reconcile an obsession with liquidity with requiring the companies to have this approach that is very much anti-liquidity. So with that little rant, I'll turn it over to you, Orange, and then I'll go through the questions that are coming in via the chat.
Yeah, I mean, I'll on your liquidity point, and then I'll go into the role of the investor, which I didn't really cover, and I left for Johnny to, I think, to give shape to. But on the liquidity point, it sort of comes down to this core principle of long-term, really long-term trading relationships, long-term investments, long-term presence in a community, and that's so central to the original concept of fair trade, which was that it wasn't about a commodity, and that's what I think people think of when they think of fair trade. They think of the commodity certification model, and in a commodity model, it's almost pro-liquidity because everything's interchangeable, and it forces you to look at where can you buy something at the cheapest price at a set quality. And there are sometimes price-quality trade-offs, of course there are, but once something becomes a commodity, it's at a set quality standard, and then it's about how do you retain your negotiating power and to be able to buy it at the cheapest place where that pops up. The fair trade movement and the fair trade enterprises I'm describing, and the relationships between those fair trade enterprises, like Johnny's Creative Handicrafts and his buyer in Europe or in Japan, which is PeopleTree, who's also a fair trade enterprise, they deliberately take an anti-liquidity approach or a long-term approach. So the orders are much longer term. The payments are up front. There's pre-financing. The whole trading relationship is set up around this fact that let's embed each other in this, and we sink or swim together if this thing works. Which means that you're taking more risk. You're not walking away from the risk. So I think it's in the trading relationships, it's in the structure of the businesses, it's in the fact that they're embedded. But you're right that there's it's almost an antithesis to conventional thinking about how to minimize risk as an investor, and these are very, I guess, counterintuitive ways of doing business and investment that we've seen spring up in the fair trade movement among those hundreds of enterprises I'm talking about. In terms of the role of the investor, two things came to mind, Andrea, as you were speaking. One was, I think this could help, and the questions that I was sort of throwing at people at the end in the slide with the taxonomy here is that these four categories of looking at the board, looking at the profits, looking at the governance documents, and looking at the ownership model, those four things can help investors select the kind of businesses that are likely to be impact first, to be impact driven, if that is what an investor is looking into. I think until now, this isn't a very pertinent question. People in impact investing tend to measure impact outcomes, which is important, but this is the stuff that almost bakes in the impact outcomes. So if you've got a business that has locked in a mission, the impact is likely to come out and be sustained over long term. And the two go hand in hand. But I think there's a real role for helping investors select investments based on this, or incorporating this analysis into it. The second is really thinking about the role that the investor plays, because I think what's implicit in a lot of what I'm saying, and maybe because it's getting sort of late into the night here, that as I speak to you that I'm being more candid, is that investors, what we're saying is, if you come in, don't take full control. Don't make the priority of the enterprise only about your interests. Now that's a difficult message to give to an investor, because if you're an entrepreneur or an enterprise manager, you're trying to woo investors. Johnny's going to want to try bring investors, but at the same time, Johnny's message to the investor is, if you come in, don't make this about your financial interests, because then we'll lose the magic sauce. We'll lose what makes this enterprise special and having all this impact. If you come in and try to minimize costs and maximize return, we'll just become another business, and there are many of them that are doing the mainstream practices around Mumbai and across South Asia. So it's about the role of the investor. That are they really willing to come in, take less power, and make their own financial risk and their own financial reward a lower priority than they can get away with having? And that's maybe a very internal question to ask. It's, I think, a very inconvenient question. It's much easier if we say there are no trade-offs, and your interest and your financial return is hand in glove with maximizing social return. My experience, that's not usually the case. There are some trade-offs in some places, and we don't need to sweep them under the rug, and we need to have, I think, a community of investors that embraces that role of saying, we're coming in, we're bringing in some really useful skills and views and perspectives, but we're not here to monopolize power, we're not here to monopolize priorities and lose what made this enterprise special to begin with.
I mean, I'm definitely with you on that, and it resonates a lot with the approach that we take in the Transform Finance principles, right? About making capital not about itself, but really wielding it and its power as a tool where the risks and the returns are shared in a way that is intrinsically fair there. I would say that over time, what are we now, 5 years in on the principles, I see a smaller and smaller community, not necessarily a bigger and bigger community, that would not go in and say, oh, what about my liquidity constraints, right? So there is more of the aligning, that's sure, especially in the multi-stakeholder approaches, the steward ownership models that we're seeing a lot of now. But in terms of saying, I am willing to give up on my liquidity preference, let's say, because of the needs of the enterprise, I'm not quite seeing the capital flowing towards those. But hey, I saw there were a couple of questions there. I don't know if you want to tackle those. I put them in the chat for you, Erinch, and then others, feel free to chime in, unmute yourselves, or put something in the chat if you'd like.
Yes. Yeah, I mean, I think there's a real acknowledgement in the most recent question you threw there, Andrea, about the fact that there will be some board members who would prefer to, I'm assuming these are board members in investing organizations who would prefer traditional business models. I mean, it comes down to, I think, being very clear that what is the priority, and is it about having some social impact while maximizing returns, or is it about really focusing on social impact? And blurring those distinctions is, I think, comfortable and has become very vogue as impact investing.
Sorry, I think most folks did not see the question. It was sent privately, okay. So if you don't mind sure. Articulating it. And yeah, it did refer to board members in investing organizations.
Sure. So it says, while I personally am on board with alternative business models that have greater benefit for farmers and workers, I think they may I think many impact investors might still have difficulty investing in newer models like the ones you've discussed, especially initially. What arguments do you have to push back on skeptical board members that would prefer investing in traditional business models? I mean, I think it's about being very clear about the priority of the investment, and this isn't for everyone. I mean, there's no point mis-selling an investment into a model like Johnny's. And maybe Johnny, you can weigh in on this as well. If you were having a conversation with an investor that was saying, look, why should I invest in you if you're going to limit the returns to me? What would you say? It might be more interesting coming from you.
I mean, I would say, why would he wants to invest in my organization if he is looking for return, because you have much better companies outside who are in traditional businesses. Now, if he is I mean, by now so many people have invested into this business with no return at all. I mean, this has been grants and aid, and there are individuals who have put money in because they believe in the mission. They want to impact lives. Now, I can understand an individual or an organization who says, all right, I will put my money in, but I want it to grow, but I'm not looking for an immediate return. And I would need that money to grow my organization, but it is not. The objective of investing into my organization cannot be a return on investment in terms of finance, in terms of monetary benefit. But the major return on investment would be that you are impacting lives, you are creating employment, you are generating a lot of livelihood, and definitely you will not lose your investment. You don't want to put money into an organization and you don't know what happens to the money. No, definitely I would say that is not acceptable either. But if you are looking for a traditional organization, traditional business, where you are looking for a high return on your investment, then definitely Fairtrade and social enterprise is not the place. But
there's another question I just want to throw at you while you're on here, which is that there's a question about the profit distribution model is working well, but you're mentioning that you're also you've had grants and aid over the years to get you going. How sustainable, commercially sustainable, is your model at the moment? And how do you get to a point of not requiring any grants or any aid to be commercially viable?
Currently, our organization is not dependent on grants. We would look for grants and aid only for new ventures, only for new initiatives. For our working capital, we have a working capital, and also all our direct and indirect expenses, etc., are covered by the sales, covered by the revenue that we generate from sales. And also from that revenue that we generate, we do make a profit which amounts to 7% of the turnover. 5 to 7% of the turnover is our net profit at the end of the year. And we would want to return half of this benefit to the beneficiaries, because we believe that still in this model, their earning is compared to the demands, or compared to the their expenses is much less. So we feel that this has to be, they are the core of the organization, and this has to be distributed with them. And definitely 50% we reinvest back into the organization, and that investment is required for example, change of machines, change of you have some amount of wear and tear in the organization that needs to be taken care of. You need small little improvements that needs to be made, that are taken care of by these profits. But beyond that, if you want growth, or if you want growth in the organization, if you want to reach out to a bigger beneficiaries and a bigger market, then you need new investment or new grants for the organization.
That's super clear. I'm glad you made that clear as well. There was also a great question here that I'll quickly address about how do we extend this model beyond sort of agriculture, artisanal enterprises, producers, I guess is what we're talking about, production of goods. How do we extend it to other sectors like financial services, technology firms? I think it's a great question. It's something that for our sector, where I think our board has previously described it as anything that you can drop on your foot can be fair trade, because it's about something you've produced. If you're producing something, then there's someone at the bottom of that supply chain whose labor is creating the product that has the value that the consumer is enjoying, and we can make that relationship fair trade. It's a new question we're beginning to look at, is how do we take this philosophy, how do we take these questions into other areas like services? There's no commitment one way or the other whether our organization will go in that direction, but when I look out into the financial services world, I certainly see mission-led organizations or mission-led enterprises that sound like they have a similar story to Johnny's. Johnny has a very obvious beneficiary stakeholder group that he's focused on. It's the women who are making the clothes that are being sold in rich markets around the world. So that his business, the commercially viable business he's built, is based around the interests of those women. In financial services, it's a lot less easy to see who is the immediate stakeholder group. Is it the community? Is it broader economy? Is it government through taxation? Is it savers? Is it someone else? Is it people, consumers who miss out on access to finance? It's much more of a mixed pool, and I think maybe the El Puente model I described with multi-stakeholder ownership and governance, where you can really say identify 3 or 4 stakeholders and throw them into that model, might be the kind of model that would work. Also technology firms, I mean, the example that came to mind as a mission-led enterprise is probably Wikipedia. Again, it's deliberately designed not to profit maximize. It could make a whole lot more money, but it's got a particular mission about information sharing and access to information in a particular way that keeps it independent. That means that the foundation is controlling Wikipedia, but that's certainly another model. I mean, you can think about things like driver-owned Uber, which I think is discussed all over the place, and cooperative platform cooperatives, which Andrea and others can tell you much more about than I can. But I think those models are coming up, and those alternative co-op models, those alternative employee ownership models, those other mission-led foundation models, they're arising, bubbling up all over the world in different ways, in different forms, but what they have in common is that they're not there to profit maximize. They've selected a mission or a group of stakeholders that they've baked into their governance model and their ownership and profit model in some way that is driving the core of their decision making. And I think those are bubbling up, and we would see ourselves as sort of sister organizations in that broader movement.
Yeah, that sounds about right. And in fact, I think one thing we can take away from this is the applicability of the principles and the framework behind the fair trade approach that Aaron and Johnny shared with us, and seeing which elements of it can be applied to different types of enterprises, but also to funds, to investment strategies, however you want to look at it. Right? I like the idea of something that you can drop on your foot, and the real economy in general, but the principle behind it, the principle that you, Aaron, has shared with me before, for example, that if a fair trade entity can source a fair trade input, it should do so, right? That can apply across all sorts of other entities too, where you create this consistency across the entirety of the company. You could look at it upstream too, right? If you are a fair trade, let's say, entity, the capital that you take should also be fair trade, or at least aligned with the principles that you espouse, if you want to have this continued consistency throughout it.
Mm-hmm. Absolutely, absolutely. And all sorts of, I mean, I'm holding here, a Fairphone, which I think has got very similar philosophy behind it. I saw Sean was on the phone, was online earlier as well, who's connected to Fairphone. But yeah, it's exactly that same philosophy of saying there's a whole stream of models of enterprise out there. You can choose to, on one end, you can say only one stakeholder group matters, and only one goal matters, and everything else falls in line underneath that model and underneath that stakeholder's interest. Or you can say, let's mix it up in different ways all along the spectrum. And I think that's what we're saying, that actually this is a diverse spectrum that we're playing in. And that's where the new economy is going. We're a part of that. We have a small community, I think an inspiring community and a growing community within that spectrum. But there's lots of parts of that spectrum that's bucking the trend of saying, there's one very extreme model of designing a business that has unfortunately taken root as a mainstream model. Let's diversify, break out of that straitjacket.
Fantastic, thank you, and I hope that this finds a receptive audience in the group that we have here and beyond. I think really the idea of saying, yeah, let's not continue this way just because this is the way things have been done when we are in a very good position, and the need is quite urgent to experiment with more structures. And I'm glad for the leadership that you have taken on this. So here is the contact information for Erinch and Johnny. We should be able to share the slides and the recording with those that are interested in it. Thank you, both of you, so much for joining us from Europe and Asia, respectively, at a somewhat ungodly hour. Very US-centric of us, but very appreciated. And please also reach out to me or to Kurt Lyon if you're interested in the work of the Transform Finance Investor Network and to stay updated on the upcoming discussions and webinars. So thank you so much, Erinch. Thank you, Johnny. And thank you to everyone who joined us today.
Thank you very much.
Thank you, guys. Take care. Bye-bye.
Bye-bye.
Bye-bye.